Why is everyone talking about Palantir stock? Well, do you mean besides the fact that it's up 24% on the day after it announced phenomenal earnings? Well, I'm going to share with you the details on why the stock price was up so much and why so many investors are interested in Palantir stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So like I highlighted in the introduction, Palantir stock is up almost $20 a share or 24%, surpassing that $100 mark, and the stock is attracting investors from all parts of the world, from all types of investors. The company announced quarterly earnings per share that beat expectations significantly. Palantir had the strongest quarter of U.S. commercial total value in $803 million, which represented 134% year-over-year growth. The total remaining deal value in the U.S. commercial business grew by 99%, 47% from the previous quarter, and the number of customers grew by 73% year over year. These are all fantastic numbers for Palantir that's accelerating this rate of increase. The second derivative is increasing, and that's such a critical metric for many stock market investors is not just the rate of growth, but the change in the rate of growth. And Palantir is representing an increasing rate of growth. And that's really exciting investors, especially because Palantir is now profitable on the bottom line. So these revenue increases are leading to increasing profitability on the bottom line. They're not just empty calories, as I like to call it, when some companies that are losing money on the bottom line generate revenue growth and it leads to more losses on the bottom line. Those are empty calories, in my opinion, and wasteful, in my opinion, not Palantir. They are demonstrating revenue growth that's expanding profitability. And these contract signings eventually turn into revenue, right? So Palantir, the way the US accounting framework works is if you sign a contract, let's say for $803 million, and let's say it's a 2-year contract, you can't just go to your financial statement and say, okay, 803 million in revenue, we just did that today. That's not how you account for the contract signing. You account for it on a prorated basis. So if you sign an $800 million contract over 2 years, that's 400 million in each year and roughly 30 million in each month. And so you recognize that revenue as time goes on. So every month, 30 million. The next month, 30 million. The month after that, 30 million. And you go, as you perform the service, you recognize the revenue. So you sign the contract to perform the service. You can inform investors that you signed that contract, but you can't recognize that as revenue. You have to wait to recognize that as revenue as you perform the service. And so these contract signings are eventually going to turn into revenue for Palantir. And the growth in these contract signings is in excess of the growth in revenue, which I really like to see. If a company grows revenue by 30%, but they increase the remaining performance obligation by 60%, I really like to see that because it signals that revenue growth is persistent, that there's a backlog of demand for the company's products, which is precisely what we see here for Palantir. The company also said that net dollar retention came in at 120%, which was an increase of 200 basis points from the last quarter. So let me describe what net dollar retention is to begin with. This measures how much an existing customer spends with you in their second year of service with you. So let's say you had one customer and that customer spent $100 with you in year one, and then in the second year they spent $120. That would be a net dollar retention of 120%. So from year one, they increased their spending by 20%, or in other words, 120% net dollar retention. And to me, the reason why this is a valuable metric to consider is it highlights the customer value proposition, which is one of the most important steps in my 6-step framework for evaluating stocks, which I talk more deeply about in my book. And the reason why this is important is because if your customers do not feel like they're getting a good value with your product, they're not going to come back and spend more. But if they do see that they're getting a good value, they're going to come back and spend more with you. And that indicates a good customer value, and that's likely to be duplicated with other customers. If this existing group of customers had a net dollar retention of 120%, it's very likely that a future group of customers will feel the same way about Palantir's value. And so they'll increase their spending. And so this is speaking to the company's persistence in sticking with its customers, in retaining customers, in increasing the average revenue per customer because the customers feel like they're getting a good value. So Palantir said that they ended the fourth quarter with $5.4 billion of total remaining deal value. Remember, this is eventually going to turn into revenue. That's an increase of 40% from the same time last year and 20% from the previous quarter. $1.73 billion in remaining performance obligations, which was an increase of 39% year over year and 10% sequentially. So the company continues adding to its backlog of orders because it can't possibly serve a 2-year contract in 1 month, obviously. And so as it goes along, it will serve these agreements and count them as revenue as time goes on. And it's a indicator that the company is generating more interest from new customers than it's going through in existing customers. Now, it wasn't all great news for Palantir stock investors. In fact, it was mostly great news. I only found a few downsides in the company's latest quarterly earnings. And one of them, I wouldn't even call it a downside, but it's just something that wasn't all that great, which was that they expect to see a more significant increase in expenses in 2025 as they hire more people to their product pipeline and continue to focus on their AI production use cases. Well, they're still going to focus on profitability, but they just need to hire more people because demand for their product has increased by so much and they see so much opportunity that they need to onboard more people so that they can deliver on this opportunity. And the reason why I say it's just one thing that hasn't been great, it would be fantastic if Palantir said, instead of, hey, we're going to increase our expense because we have a lot more demand, if they were to instead say, look, demand for our product is soaring and we've built our business in such a way that we can handle more demand without needing to spend more money on talent. That could be something that they could have said, which would have been absolutely phenomenal and fantastic, which is rare to see. You don't often see that businesses that experience this type of increase in demand that are able to handle that without hiring more people. And so this is just one of the things that wasn't absolutely fantastic in an otherwise incredible quarter for Palantir. And you can understand why so many investors are talking about Palantir stock when they deliver such a strong quarter.
Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.